It's Tuesday, February 2nd, 2021, and your cherry bomb trade is in for today. Today, we're going to be looking at a bullish trade and a not so liquid oil underlying. So if you're in need of some positive bullish deltas, right, and you don't mind liquidity, and or lack thereof, then this might be a trade for you to consider. So without further ado, let's hop on in to Thinkorswim, shall we, and get started. Hi everybody, my name is Neil, and I'm down here in the bottom corner over here. This is Option Theory, and I do appreciate that you've been here. I almost said this is Thinkorswim. This is Thinkorswim. But yeah, you do this enough. It's almost been a year. We're almost at a full year of me doing this. And I hope you've been enjoying what you're getting here. If you're new to this channel, welcome, and hopefully you will like what you will get. Stay to the end. We'll talk a little bit about what we do here. And for now, I'm going to get right started with what we're going to do. So on screen here, you're going to see the chart for OIH and oil underlying. It's been beat up recently as the email that we receive 5 days a week talks about trade ideas. I should say 4 days a week. And today's one talked about oil being beat up. And yeah, so this one takes a bullish outlook on this one. So maybe it'll come back up. I don't know that I'm particularly bullish on it right now. And, TLDR here, I'm probably not going to put this trade on because I am not in need of bullish deltas, right? I could use a little less deltas. Although, market's looking pretty good right now to be a bull, which hopefully will help out. So I don't mind trying to neutralize some of those. So let's head over to this Analyze tab, go to Add Simulated Trade. And we're going to be in the March monthly expirations, which is the sweet spot of 45 days to expiration. That's the Tasty Trade sweet spot if you follow those mechanics. And that's one of the things we do here is test out our theories of which set of mechanics we want to go with when we eventually move, right, to real money. So anyway, here we're looking at buying a 160 call and selling the 165. So that's left click on the ask for the 160, hold down the control key and left click on the bid for the 165, and you'll have yourself a debit spread here, a vertical, where we're long one and short one. It is a one contract sizing, right? So we're going to pay $2.53, which means we could make $2.47, right? So we know our max loss is going to be what we pay for it. Our max profit is going to be the difference between the width on a $5 wide here, right? So 250 plus 247 is $5. But what's our probabilities? So let's head to this risk profile. Let's make sure your date is set to expiration, 3/20, which is the same number that you see here. And then set your price slice, this gold dotted line, to where this turquoise line crosses the $0 x-axis, right? To do that for you, go to set slices to break even and choose expiration. So we're looking at roughly a 48% probability of profit, or ending up on or to the right of this line. Right, if we ended up on this line, it would be not a profit. It would be a slight loss due to commissions, etc., and fees. So we'll call that a 48% pop, or probability of profit. But if you were to look at Tastyworks, the P50, the probability of us taking 50% of the max credit in the next 45 days is 65%. So we could walk away with, let's call that $1.25. There's a 65% chance of us being able to take that and leave in the next 45 days. So I'm going to right click this trade, review what we've said here, confirm and send, and we're going to be looking at a max profit of 247, max loss of 253, that which we already said. Now, if this is a trade you'd like to put into your portfolio, maybe you're just getting into paper trading and you're going to try to follow along with us, then go ahead and hit send. That'll put it into your working orders. However, I do want to call your, first off, I'm not putting this trade on, as I said earlier. But let's go back over here. I have my column set up, so I've got delta and open interest here. Those help me out. I like to be able to eyeball. Delta does a lot. It's a great Greek to get comfortable with. And then over here, we've got the open interest. So we don't see a ton of open interest here in OIH. So there's a good chance I don't think this is going to get filled. But hey, you never know. I've definitely had illiquid stocks that are underlyings, right, that that do get filled. You wouldn't expect it. All right, so I did say, hey, stick around to the end, and I'd like to explain a little bit what we do here. What you can see what we do here is we build out a portfolio here using trades that we get primarily from Tasty Trade. They send us an email. So if you want to get those emails too, go down to the description below. You'll find a bit.ly link. It'll send you over to the MailChimp sign-up page for Tasty Trade, where you can select the different email lists that they have. Cherry bombs are the ones that we use 4 days a week. And on Monday, if you give me a ticker, I'd like to do a video on that underlying and see what I would come up with. And then you can compare it to what trade you would put in that underlying. All right. I do appreciate each and every one of your views. If you've made it this far in my video, here's a thumbs up. Until I see you in tomorrow's Cherry Bomb, everybody, happy trading.